I don't believe the Bitcoin as digital gold. I just think it's the latest iteration of fool's gold. It's digital fool's gold. If you really want to get out of fiat currency, if you're worried about inflation and monetary debasement, and you want to have a store of value, and you want to have, rather other than just making more traditional investments like buying stocks or buying real estate, then buy actual gold.
There's a safety issue, there's a trust issue, there's a verification issue, there's an immutability issue. Bitcoin has all of those things, which is the reason why it started as an idea 15 years ago, and over 300 plus million people are using it today.
In a debate hosted by ZeroHedge, top analyst Peter Schiff clashed with billionaire investor AnthonyScaramucci of SkyBridge Capital about whether Bitcoin or gold is a better investment. ShapeShift CEO Erik Voorhees and Nouriel Roubini, an economics professor at NYU, further joined them. In his analysis, Peter Schiff criticizes Bitcoin's viability as a currency due to its slow speed and high costs. He believes that while Bitcoin may attempt to emulate gold, it needs to catch up due to its lack of intrinsic value and inability to replicate gold's unique properties. Gold is seen as a hedge against inflation because its price generally rises as the cost of living increases. This is likely the case now. Despite inflation coming down from 40-year highs, the two items not measured in so-called core inflation data, food and fuel, continue to soar. So has gold, which is trading above $2,300 an ounce. Contrary to that, Erik Voorhees also states Bitcoin's growth and utility as a decentralized digital currency. He emphasizes its $1.2 trillion market value and practical advantages in international transactions, offering it as an alternative for those disillusioned with traditional finance. Meanwhile, AnthonyScaramucci doubts the feasibility of returning to a gold standard due to its restrictive nature for a modern economy. Since the Great Inflation in the 1970s, the price of gold has increased from less than $80 an ounce to the current record level of over $2,200, gaining more than 2,600%. Of course, during this same duration, the purchasing power of the US dollar has plummeted. Analysts like Peter Schiff and Nouriel Roubini have emphasized in the debate that central banks are more inclined to purchase gold rather than Bitcoin because of its stability. However, current signs of de-dollarization, as evidenced by central banks globally increasing the share of gold in their reserves from 11% to 15% over the last 5 years, suggest a growing desire among central banks to diversify their reserves away from reliance on the US dollar. Now, let's dive into the clips of the recent gold versus Bitcoin debate featuring Peter Schiff, Nouriel Roubini, and the Bitcoin team, Erik Voorhees and AnthonyScaramucci. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
I mean, Bitcoin was created to be a digital currency, but it doesn't really work well as a currency. It's very slow. It's very expensive. There are a lot of other cryptos out there that could do that better, but the problem is most of them are too volatile to really be money, because money needs to be a commodity. It needs to be the most liquid commodity. It's not, just a unit of account and a medium of exchange. It really needs to be a store of value. And now Bitcoin is trying to reinvent itself as some digital version of gold by claiming, well, we're not going to be used as money, just like people aren't using gold right now as a medium of exchange or a unit of account. They just store it as a safe haven or store of value. So Bitcoin is like that. It's just some digital version of gold. But it's not. I mean, first of all, if anything, it's an anti-gold. I mean, look at today's trading. It was a risk-on day. Everybody bought risk assets, so they bought Bitcoin. They sold gold. It does the opposite. But gold is an actual physical element. It derives its value from its metallic properties that are very unique to gold. You can do things with gold that you can't do with any other metals. It's the most valuable metal on the periodic table. It's the most useful metal. Bitcoin can't do anything that gold can do. I don't think we're going to go to another fiat currency. I think we're going to go back to gold because, remember, before the dollar was the reserve, gold was the reserve. And the only reason the dollar replaced gold was because it was not only backed by gold, but convertible on demand into gold. So it wasn't until 1971 that we went off a global gold standard to a fiat standard. It's an experiment that has failed, and I think the world is going to go back to gold. And that's going to be a huge problem for the United States.
Can go back to gold, and I'll point to what happened in 1933. The problem is the gold is too restrictive for an expanding universal economy like what we have now. So I don't think they go back to gold. But let me just make this point: it is fixable. And Nouriel even wrote about this in Crisis Economics in 2010. The United States passed legislation signed by George Herbert Walker Bush called pay-as-you-go. You can Google it. And you put up guardrails. If you wanted to have a tax cut, you had to find something in the budget to cut. If you wanted to increase social spending, you had to raise taxes. This is what got Bush in trouble. Some of us are old enough to remember, read my lips, no new taxes. We went into a recession because of the Gulf War. Bush increased social expenditures and then commensurately raised taxes. He set the trajectory that was followed by Bill Clinton to put the United States on a surplus. At the end of the Clinton administration, Larry Summers will tell you this, Nouriel Roubini will tell you this.
I was there in
we
the
had
White
a,
House.
We had a $240 billion budget surplus, and the CBO in 2000, during the election, said we would have a $5 trillion budget surplus at the end of 2010. Bush wanted to give it back to the people in taxes. Gore wanted to build infrastructure and do things related to the environment. We squandered it in the Gulf after Osama bin Laden attacked the United States. My point being, it took 10 years to get it going in the right direction.
Peter, I will praise you if you can get the world to accept gold again as a form of normal money. That would be great. There are some other of us who don't wish to wait around for that, and we actually think a decentralized form of money that you can send in a digital world has value. And back in 2011, 2012, 2013, when we had our first debate, I understand that the burden of proof was on us. We had to argue that it was a currency or that it was a money. We had to make those statements because there's no reason for anyone to believe us back then. But it's 2024, and this is a $1.2 trillion asset, one of the most liquid assets in the world, one of the top 10 assets in the entire world by market cap. I don't need to keep making the case that Bitcoin is something. The world believes it's something. You can see why if you ever go try to send a transaction internationally with a bank and you do it with Bitcoin on your phone, anyone who's done those two things will see the value immediately. And I don't have to defend it much, right? It's just growing and it's an option. There's no Bitcoiner that would force either of you to ever use it. And if you want to stay in the traditional financial system, go down with the Titanic, go for it. Many of us are choosing an alternative.
Regarding Bitcoin's status as a currency, Nouriel Roubini succinctly argues against its classification based on several critical criteria. He points out the need for universal acceptance, scalability issues, volatility, and the absence of a unique numerical value. Bitcoin and gold updated their all-time high prices at the beginning of 2024. Since its launch, Bitcoin has skyrocketed from a few cents to over $70,000, translating into massive percentage gains. Gold has increased by over 110% during the same period. Gold has a longer track record as a store of value and a more stable price history, making it a traditional safe haven asset. Despite acknowledging governmental and ideological challenges, AnthonyScaramucci predicts Bitcoin will reach a $1 million valuation per coin within the next decade. Let's get back to the interview.
Bitcoin and thousands of other cryptocurrencies being currencies. One thing, they're not money, they're not currencies. If anybody knows anything about money, monetary theory, knows that something to be a currency has to be one, unit of account. In the US, goods and services are priced in dollar. In the Eurozone, in euro. In Japan, in yen. Nothing is priced in Bitcoin or any other of these pseudo cryptocurrencies. Secondly, for something to be a money, it has to be a scalable means of payment. With Bitcoin, you can do 5 transactions per second. With the Visa network, you can do 50,000 transactions per second. It's not scalable. 3, for something to be a currency, has to be also a stable store of value. Gold or other things, even the basement of fiat currency is 2% per year in the US. Value of Bitcoin can go up by 10% one day, 20% down next day. That's why even if you go to a Bitcoin or blockchain conference, they want you to pay the conference fee in what? In fiat, not in Bitcoin, because the value of their profits can overnight disappear just because the price has fallen by 20%. So no vendor or point of sale is so idiotic to accept Bitcoin as a means of payment. It's not happening, it's not a store of value. 4, something to be a currency has to be a unique numeraire. I have to tell the relative price of water to beef. That's why we have a dollar. In a world in which you have thousands of tokens, everyone is his own token for another goods and asset. I cannot, if you have a Pepsi token for Pepsi-Cola and a Coca token for Coca-Cola, you're going back, wait a moment, you're going back to barter. You cannot even tell the relative price of two goods and services. I mean, the Flintstone and the more sophisticated banking or monetary system than crypto, because that numeraire was stones, but you could tell the price of bread versus beef based on that one. Finally, people say something is scarce is valuable. There are tons of things in the world. You go on the beach, there are all these pebbles. They're worth nothing, even if they're scarce or not scarce. So scarcity by itself doesn't give you value. It has to be something of a use.
Bitcoin will be, because of what Nouriel just said, it will be the currency of choice where it becomes the Bitcoin standard and the global currency.
You don't think
Could it be? Let me finish. Could it be? Erik could be right because of what he said about the blockchain. There is a payment system there that could enable it. But the problem is what Erik probably doesn't like, and what I have to deal with, is that we have governments. And we have leftists in the country, and we have rightists in the country, and we have to deal with all these people. And the compromises of what they are will probably make Bitcoin not the currency of choice. Let me just finish, please. Make my last statement. But it is there. It is tangible. It has specific qualities to it that people in the world, 100+ million people, 300 million wallets, have accepted the properties of Bitcoin. The same way for 5,000 years, people have accepted the properties of gold. And these pieces of cloth in my pocket, they've accepted it. If we were in philosophy class, these pieces of paper or cloth in my pocket are worthless. But you want it, and the maitre d's going to want it tonight when I give it to him.
All right.
Okay, and so the point is that Nouriel's correct about some things, but I'm telling you that Bitcoin will be a $1 million coin asset over the next 10 years.
For gold investors like Peter Schiff and Nouriel Roubini, the consensus remains that gold is a superior portfolio diversifier to Bitcoin. While gold reduces portfolio risk, Bitcoin simultaneously amplifies both return and risk. The study found that gold lost its role as a safe haven asset during the pandemic, but this role was restored in the Netherlands, the US, and Germany during the Russia-Ukraine conflict. Similarly, Bitcoin was not a safe haven asset during the pandemic, but it was a vital haven for the stock markets of some European countries. In a world increasingly driven by economic uncertainty, which asset holds greater promise for preserving wealth and hedging against market volatility? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.